And joining me in studio now is Mr. Matt Chipman. Matt is the editor-in-chief of the Green Baron Report. Matt, always good to see you.
Glad to be here again, Don.
It's been a little while since we've talked.
Yeah, it's been at least a month.
At least. Now, since you and I last spoke, we have seen record Dow after record Dow. S&P has hit all-time highs. Even the NASDAQ has made a major comeback. But what I'm not seeing is the kind of enthusiasm that we used to see from people, you know, back in the late 90s. I mean, back in the late 90s, you would go to a cocktail party or a dinner at somebody's house. What were we all talking about? We were talking about our portfolios. I just signed up with Ameritrade. I just signed up with E-Trade. I just bought this stock. Everything's going great. We're not seeing that this time around.
I think what you're having now, there's a different dynamic going on. A lot of people are putting money to work in mutual funds, so they don't really pay attention. It's also the big money that's going into these funds that's helping push the market up. They've had $74 billion go into equity funds this year. So they give it to their money manager. Stockbrokers aren't what they used to be. They basically just take your money, hand it to a money manager in New York. It divides it up into a portfolio and it goes to work. So people aren't as in touch and in tune with specific stocks. Then they're not watching them one by one and talking them up. And so, you know, and I think the rich are getting richer right now with this big push in the market. You know, where we focus is in really the smaller tier markets.
Well, it can be very difficult to get too excited as to whether or not Microsoft or United Technologies goes up $1. I mean, that was something that people got really excited about, say, in 1998, 1999. But wouldn't you agree with me that the segment that you and I pay attention to, the small and microcap sector, that's really where a lot of the gains and a lot of the excitement and enthusiasm is lying right now?
Well, I think so, and I really think the opportunities are bigger than ever. I think you're going to see development of technology in a lot of sectors come together in the next 2 years in areas that you've never seen before. And I think, you know, and a lot of the big cap stocks have moved up a lot because of interest rates. You know, finally interest rates ticked up a little bit recently, and I think between that and the global market slowing down a little bit, the 5% dip, I think we're now finally, you know, seeing that slowdown that we typically get right before the summer.
Well, we're seeing a correction in the major markets as well, and I think there's a variety of things. Like you said, a slowdown going into the summer. Let's face it, there's been a lot of government scandals that we've been enduring this week. That has an effect on the markets. People are wondering about the jobs report, which was not as healthy for the month of May as they had hoped it had been. But you know, I look at, you know, when I started this program 17 years ago, the idea was that I would be able to talk to the CEOs of companies that might represent the future. And we've had just the most amazing companies on the program during that period of time, nearly 5,000 companies. I know that while you've been producing and editing the Green Baron Report, you've seen the same kind of thing happen.
Oh, yes, absolutely. And we've had tremendous reaction to some of the ideas. We've been coming out with more stock ideas. We're calling them more like trading alerts. But the reaction to these alerts, you know, there was a time where it was muted. You wouldn't see a lot of volume come into them. It's like, okay, just another idea from another newsletter. What we're seeing right now is really a lot more action, more volume, more price increase. When we initiate coverage as a trading alert or a short-term trading idea, we're seeing that action in the market.
Well, I think you know, the main difference between what we do here at MoneyTV and what you folks do at the Green Baron is that you will actually make a recommendation. You'll actually produce a stock pick where we basically stick with information, let people make up their own minds. But what industry sectors are you looking at right now?
We still have a lot of different sectors we look at. I mean, I look wherever there's opportunity. The balance sheet makes sense. I mean, we do technology, oil and gas. We do real estate. You know, it's been very hot in some areas. You know, it is diversified. You know, a lot of people think the Green Baron Report is focused on green energy companies, but those have come and gone, and that was never really our focus. We were always about green, meaning make money. You know, so we're the Green Baron. You know, we've got some tremendous ideas, I think. You know, there was, you know, one on your show that we spoke about for a while, and they were really trying to get to the next level. But that LIG assets, LIGA, they just came out with news yesterday, you know, a really detailed update. And as soon as they close one large transaction, which I think they mentioned in the release that it's very close, it totally changes the landscape of that company. And I think the asset base is only a fraction of where that stock should trade.
Now, I know that company is heavily involved in real estate, and it brings to mind a subject because the country has gone through recessions at different times in its history, but it never really seemed to so detrimentally affect real estate as this last one did.
Right.
And we never saw the value of our homes take a dip as we did in this last time around. There's talk of a real estate rebound. I mean, that really has to be the foundation for any real recovery, doesn't it?
I think it does, and I think that's why the government has been so focused in trying to help homeowners. I mean, you've had part of the problem was it got too crazy. I mean, we all know that there were a lot of people that shouldn't be involved in buying homes, and I still think that's the case. I mean, if you can't put at least 20% down for a home, I don't think you should be owning it. Canada doesn't even allow you to go into a 30-year mortgage. I mean, their longest mortgage is 20 years. They want to make sure that if you're going to buy real estate that you can afford it. What's happened recently is the investment companies have accumulated a lot of assets, a lot of cash, and they're becoming cash buyers in the market and renting these same homes out. There's been some stories out recently that the younger generation isn't so interested in owning their homes. They're interested in renting. So I think the market is changing a little bit, where you're going to have more people out in the market renting.
Well, you know, the investment companies you're talking about have taken a lot of the foreclosed inventory off the market. And so now people that are looking to buy homes, they're kind of back to where they were in 2005, 2006. They're having to buy existing homes that people are living in and trying to sell, or brand new homes.
Yeah, I mean, it is a different dynamic. It's a different market. I think the real estate I have seen strengthen. I don't want to see it go up too much. No. I mean, too soon, because that is going to keep a lot of people out of the market.
That's true.
So, you know, it's
about 20 seconds left. People want to know more about the Green Baron Report. What do they do?
You just go to thegreenbaron.com, click on any join icon, and just get us your email address. You can delete or stop receiving it at any time if you want. We are coming out with a new trading alert on Monday. Our last 3 trading alerts have averaged about 30% gains on day 1, too. So you'll want to get this one on Monday.
Okay. Once again, the Green Baron Report, thegreenbaron.com. Matt, thanks so much.
Thanks for having me again.